Because you just mentioned integration of financial markets, and because we started with red hot US inflation figures, my next question would be, these figures a point of concern for India specifically, according to you?
Correct. That's a really good question because you're a student of economics. I would want to actually get your viewpoint as well. Imagine what comprises the GDP of the equation. So, for example, you are a native of Spain. You want to increase the GDP of Spain, right? What are 4 or 5 levers through which you could enhance the GDP, Carolina?
I can increase consumption.
Very nice.
Increase government expenditure.
Very nice.
I can increase exports.
Very nice. And?
I can decrease imports.
Correct. Perfect. That's really interesting. Now, Carolina is bang on, right? So for you, any country at the end of the day cares about enhancing the economic well-being. I mean, we can go on and of course discuss if economic well-being is the only indicator, but it is one of the primary indicators on which governments are judged. Are you doing a good job or not? So the question is really valid, right? You as government of India, you as the beneficiary sitting here in India, how should the Fed policy in US and the inflation in US really impact you? So in India would want to care about the consumption, the exports, the imports, or the infrastructure, the government expenditure, right? So largely the imports that we make is going to be a heavy penalty for India. So anything that is produced in US and you are bound to consume it because you are not doing a make in India, that's going to be heavily expensive for you, right? That is going to enhance the expenditure of the government, and we can go about and have a chat around current account deficit, where current account deficit could be more on the negative side because your expenditure is rising. So that's point number one. I think point number two is from the point of view of beneficiaries, right? There are two things that could happen from the point of view of beneficiary. The first is the rising cost of capital. With time, if you are going to be there, obviously, right, the interest rates are extremely slashed in US, and the Fed has maintained that we are not going to be raising our interest rates for some time. For users who do not understand the value of interest rates, should understand that if the interest rate is less, you can borrow the money easily and you can make purchases in the market. Governments lower down the interest rate, specifically the repo rate, in a bad time economic recession, so that you are not facing those hardships as you might be, right? And there are of course technicalities around that, but the government has certain sense of time boundness to it. The government will not obviously have economic recession or the lower interest rate for a very long period of time. Why? Because that leads to inflation, that what we're seeing right now. After a point of time, Fed would say we are raising our interest rates, right? We are going back to where we were before. And that would mean if you're a consumer who were looking forward to learn to raise your capital from not India but outside, right? That's going to burn you, because currently you're probably thinking that the capital, the rate at which capital is coming to you from outside India is really cheap, but that's just a transitionary phase. So that's point number one. Point number two, and the most important for you, especially if you have been investing in the stock market, is going to be from the point of view of that Fed actually raises their interest rates, right? The RBI here in India would actually raise their their repo rate as well. And why, you may ask, right? If let's say the Fed increase their interest rates, right, the cost of good and capital will become competitive in US. Versus in your case, the cost of good and capital could continue to be really expensive because your rates were low and hence there is inflation. So India will eventually have to match up the rising rates of goods, the rising rate of interest rates. And what will that mean? And I take a full circle, Carolina, because we started a chat on bond, right? Currently, bonds are not really lucrative in the market because the interest rates are low. So what I earn on the bond is extremely not very lucrative. Hence, a lot of the Gen Zs are gravitating towards the equities market and the stock market. And when the RBI raises the rate of interest, right, then probably there could be at least the yield that will come to you will become really very attractive, because you know that I can suddenly earn 7% or 8%. And we can go on and talk about the yield percentage there. But what I'm trying to say is there is a rally going on for the millennial and the Gen Z. in terms of how much can they earn, and everyone is just rushing towards equities. While equities, there's a high rate of return, but we need to all know that there is a high risk as well, right? And versus in the bonds and the entire bond yield market, there is even though there is mediocre return, but there is largely a lot of stability. And Warren Buffett has always maintained that bonds are actually a great way of making sustainable money for a long period of time. You should only invest in stocks when the economy is down, because when the economy is down, the rates would be less on the bonds. I'll take a pause here, but I think there is one more thing that is on my mind, but I'll allow you to ask any follow-up question if you have.
Thinking about the rest of the audience, which is probably a millennial just like I am, I'm just curious to know how everything we've talked about and the US inflation figures should worry us specifically.
Sure, that's a really good question. And let me actually break down the entire equation in the form of inflation, right? And we've been talking why inflation is taking place and why should you worry about it. Why does inflation really occur? Because government is pumping in a lot of money in the society, so that even if you're not earning, the cost of capital goes down, so that you are able to take easy money from the banks. You can use that easy money from the banks to probably pump in your business or probably survive, etc., right? But how sustainable is that, right? Carolina, if I were to ask you, is this a sustainable strategy by the government? Largely no, right? We just discussed there will come a time when the Fed or even the central bank will increase the rate of return. My understanding is that these are nudges. These are nudges in the case of crisis. And that's why both for governments and for the millennials, what is the sustainable solution? It's upskilling. And why do I say so? In fact, during my time with the government of India, after a lot of efforts and a lot of looking at policies, what I largely aligned is any nation cannot become big, any individual cannot become big till the time they focus largely on their own upskilling, right? Government can help you in case of crises, but there will be a time, and it's soon to come, when the rate of interest will eventually rise, right? Back to where they were. That means you are on your own. Nations are on their own. Largely the population is on their own. If you do not invest in your upskilling, then nobody eventually will be able to help you. And that's largely the main thought that I have. I think our country has been on the right path in terms of education, but still there is so much more to do. And in fact, at Global Governance Initiative, it has been our mission that we want to reimagine and rebuild the entire higher education ecosystem. I'm not sure about you, Carolina. What I learned from St. Stephen's College almost 10 years ago does not come handy, apart from the fact that I was surrounded by really smart bunch of folks. And we have taken this upon ourselves to make sure that the millennials are extremely well upskilled if they want to make a career in especially policy positions and management consulting positions.
Thank you so much, Shatakshi, for this chat. I learned a lot from you, and I hope everyone else has learned as well. And I look forward for our next chat.
Absolutely. The pleasure is on mine. Thank you so much, Carolina. This was really interesting. I got a chance to look at certain things beyond the realm or the micro view that we all have in a day-to-day basis. I really look forward to our next chat. Take care. Bye.
Bye.
Subscribe right now so that you get notified every time, every day, whenever I'm putting up my videos on career advancement, personal finance, and lots of productivity hacks.